Hello and welcome to this Forex Preview at XM.com. I'm Maria Bashar-Taviz, and joining me is lead investment analyst Rafi Boyadjian. We'll be discussing upcoming U.S. CPI data and the outlook for the dollar. So Rafi, CPI inflation slowed back in April, and it's expected to have moderated again in May. Do you think Fed policymakers might pause their rate hikes if the CPI print, which is due out on Friday, matches expectations?
Well, Maria, this is indeed what's been on investors' minds in the last few days or so, because the Fed had hinted that it's open to pausing its rate hikes later in the year if inflation was to fall back quite substantially in a convincing manner. But more recently, we did hear some hawkish comments, including Fed Vice Chair Lyle Brainerd, who kind of hinted that that's not looking very likely at the moment because inflation is still too high. So even if we do see some signs of moderation, they're not really ready to pause rate hikes just yet because they want to make sure that inflation does start moving much closer towards their 2% target. So right now, as things stand, if anything was to change, is that the Fed would probably slow down their rate hikes to 25 basis points from September onwards rather than pause them. But of course, that's all going to depend a lot on what happens to the data. So the next one, as you said, comes out on Friday. So we had seen CPI fall to 8.3%. It's expected to hold there for the month of May. Now, core inflation is looking a little bit more encouraging because that's expected to drop to 5.9%. But if we look at the forecasts for the month-on-month rate, CPI, the headline figure, is expected to accelerate a little bit to 0.7%. So that suggests that we're not really going to see a fast drop in the annual rate. We could see inflation hover at high levels before we see a more substantial drop. So that's really the main concern right now for policymakers. And it might take a few more months of data until we get a clearer picture.
If Friday's report does indeed show that inflation is cooling off, what will it mean for the dollar?
Well, the dollar had actually fallen back during May because inflation expectations had fallen quite a bit. But now we're seeing inflation expectations edge up again because, well, one of the factors is, of course, energy prices have kind of gathered quite a bit of steam lately. And the US economy, we're getting, although there's some signs of slowdown, overall it's doing well. So now investors are thinking again, it's going to take quite a bit more to get inflation back down again. But of course, if we were to get some weak numbers on Friday, of course, it's going to depend on how big a miss we were to get. If we get a slight miss, that would still, I think, cheer the market because it would, at least in the short term, it would signal that, yes, we are seeing some moderation. The Fed won't need to keep raising rates aggressively for that much longer. And that would be negative, of course, for the dollar. But we also have a bit of risk off as well. We've got this ongoing concerns about stagflation. So even if we were to see the inflation picture in the US start to weaken a little bit, if there's this heightened risk of recession in other countries, maybe even the US, but if the risk is higher for other countries, the dollar would benefit from safe haven demand. So it's hard to really, give a strong prediction for the dollar at the moment, but definitely a knee-jerk reaction to any soft numbers in Friday CPI would be that the dollar would likely fall back quite a bit.
Rafi, thanks so much. And thanks for joining us at XM.com.